Boy, oh boy, that time just flies when you're having fun. It's about that time of day again here, boys and girls. Time to get back to work. November 20th, 2019. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, of course, if you're here for the first time tonight, it's great to have you with me here. If this is your first time watching this video newsletter, because I help traders find high-quality trade setups using a very simple three-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. Tonight, my job is to help you guys find the best levels of support and resistance for tomorrow, plan the best entries and exits for tomorrow, and most importantly, avoid the common mistakes that will take back all those gains in tomorrow's, that's Thursday's, trading session. And we have quite a bit to cover here tonight on the video. We got some charts to look at here this evening. I got some oil, some S&P, some Nasdaq, and some gold. I've also got the calendar for tomorrow. We get some big news peppered throughout the day tomorrow, and I want to make sure that you know when you can safely trade, when to be looking for the best patterns, and we'll put it all together tonight on this video. I'm going to jump in first, though, to the crude oil market, because, boy, I'll tell you, just like we anticipated, they pulled the string on that oil today, and whoop, whoop, right back up again. We came all the way back up to the high from yesterday. Let's jump into that oil here, because oil is, man, it's been a fun couple days trading on oil in our trade room. And of course, we come in tonight. This is almost the polar opposite of what we had yesterday, right? Yesterday it was a straight line down. This morning, though, we talked about this last night, right? Usually when OPEC gets things ruffled up, right, the 24 hours later, we're usually right back where we came from. So we got the 1, 2, 3 reversal, right? And it was on to the upside. Now, it's pretty obvious the market's bullish right now, but we're sitting right at that prior high at 57.21. This is kind of like a mulligan. Right? It's kind of like a redo. The buyers said, let's start over again. Let's go back to where we were, right, 24 hours ago. That's pretty much where we are right now. It's a big bull market up. I got higher lows. I got lower highs. We call this a spike and a range pattern. And really at this point, the one thing that stands out on this is the fact that you'll notice, other than about 10:30 this morning, there really wasn't any pullbacks in this big chunk right there, right? There really wasn't much of a pullback there. And I would imagine a lot of buyers are going to be waiting for that pullback so they can kind of load the boat once again. And really at this point, our next stop is back up around that 58 level. So, really at this point on the crude oil, I've got really three scenarios I'm watching for. It's a spike in triangle, or a spike in range, which means I want to pay attention to those triangle swings. So I've got one buy zone here at 73 to 64, a much more what's the word, attractive buy zone down around that 37 and 17. Now, as you can imagine, one of these is going to be a lot deeper pullback than the other. So tonight we'll talk about the two different types of entry setups. Very, very important. You'll learn a lot about kind of how to use the personality of this market to plan the right entries. We talked about last night, plan the exit before the entry, and that's exactly why this is so important here, to choose which pattern fits best depending on which pullback area that we get. So we'll talk about this tonight on the video. And then what if we keep going higher, right? I've got two patterns I'm watching for as this market tries to go higher. And so we'll talk about, right, how to trade a breakout, how to avoid those fake out breakouts, because we have a pretty good idea we're going back to 58 here eventually. And I want to participate, but I don't want to buy high right now. So make sure you stay tuned. If you're a crude oil trader like I am, we're going to break this down into small bite-sized pieces here on the oil here tonight on the video. Over on the S&P, boy, they got a little bit beat up at the beginning of the day today, right? It was kind of a slow start to the session, but as you can see, they got a clobbering as the market went through the lunchtime hour. Big move down, and then you can see here the bears tried once, bears tried twice. Usually, right? Usually after one try, two try. We learned about the two try rule earlier this week. Usually after those two tries, the market will shoot back up. And you can definitely tell They got their 1, 2, 3 reversal, right? They marked up their high, they marked up their low, and you can easily see the buyers were waiting there, right, to buy that pullback. So we know right now there definitely has been an easy buy set up only a couple hours ago here on the S&P. But you'll notice though, right, we didn't exactly get that runaway here like we saw on oil. And what that tells me is there probably are some sellers trying to come in and defend this area, right? That 31.11 area. We'll talk more about that area tonight on this video. But look at all the big, right? Goes up, back down, up, back down, up, back down. Okay, that is definitely telling me that although I will be ready for the rally going higher, back up to retest the high, it looks like, if I have to guess, it looks like that strong move down is probably going to get some sellers here trying to get another retest of that low. And I hope they do. I really hope they do. I hope we can get a nice shot going lower here because they're going to walk right into the low of this hidden channel. And you know me, right? I like to use those hidden channels to catch those counter trend traders on the wrong side of the market. I get a great spot down around that 3,100. Now, depending on what happens, we'll talk about the specific entry patterns to look for on this. But I hope these bears, I hope they give it one more heave-ho to the downside here so we can buy into those stop losses. And again, we'll talk about the exact entry pattern to look for on that. I'll also talk about how to trade this thing as it goes higher, because as it goes higher, we've got a key level here overhead, and it's important that we know, again, where the exit is before we plan our entry. So if we run higher, we'll talk about some important components to think about as we go back up to retest those highs here. So S&P is looking pretty good. Nasdaq is very similar to the S&P. Nasdaq, in fact, got all the way back up into that range that we talked about from last night's newsletter before, again, they just, something happened here. I won't bore you with the details of why, but something knocked this thing down. And, usually when you see a strong move like that, right, you don't want to just buy it right away. You let them try once. You let them try twice, and you can see how bullish it became right after the 2-try rule kicked into gear here. You can also see, right, that 1, 2, 3 reversal. They mark up that high down to that low, and they're buying off the low. So again, no shortage of easy buying opportunities if you follow the plan from last night's newsletter. But the most important thing right now, something's wrong, right? I mean, if we get that buy off the low of that channel here, why aren't we like oil, right? Why aren't we back up to retest the high? I have to assume that sellers here are trying to hold that prior swing just below the 8,300. And again, just like on the S&P, I hope they do. I hope that strong move down, they try to get another one here so we can possibly get this thing to rally back up. So I got my spot down here. I'm definitely looking for a buy off this 82.63, 82.60 area and change. And of course, we'll talk about some specific patterns tonight. Now, you might be wondering, well, what if the market keeps going lower? What if it does go lower here? Well, that's a great question. And there's actually 3 different scenarios that I'm going to prep you for if we do get this market going lower. And that, of course, will also apply to the S&P. So we'll talk about the sell side. We'll definitely talk about the buy side. I want to buy in that battle zone. If we go higher, you got to be careful. There's some resistance coming in overhead here. So we'll definitely talk about all of that stuff to worry about here tonight on the video. Last but not least here, over on the gold. How's the gold doing? Gold's still kind of back and forth here. Chop, 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 back and forth inside of this trading range. We have a bull bias into that trading range, which, as you know, means we are focused on buying right underneath that range right now. So my goal right now is to look for levels of support underneath this gold range. I got some support trend lines, some swing lines, some buy zones down here. I just want to get this puppy down into that battle zone, get out of this range, give us a chance to risk small, to earn large, and pop this baby back up into that trading range. Buying underneath the range is my top priority for tomorrow. But what if we go higher? If we go higher, we've got some concerns overhead because we got a measured move up top. We got a bunch of resistance here overhead. And you know what I'm going to say, right? Anytime we have a major level of resistance, I've got to be prepared mentally, really, to be patient for the right pattern. I've got two setups I'm going to watch for up here. There's one particular pattern, though, that we're really going to kind of bank on tomorrow if we go higher, because, again, you don't want that measured move. But if they can get through that area, though, we got quite a bit of open space up there to our next milestone, just shy of that 1,500. I kind of joked around by saying 1,500 this week. Tomorrow could be a big step in the right direction. It's only Wednesday, right? So we'll see what happens for tomorrow. Bottom line, though, is we're buying low. We can buy the breakout, but we have to see the right breakout pattern. And we'll talk about all those details tonight on this nightly newsletter. Now, of course, before we jump into the video tonight, before we put everything together, I just want to make sure to remind you and encourage you to make sure you join our mailing list. You may not be aware of this, but right before I publish this video, I send out an email to everybody on our mailing list. That way, everybody on the list knows exactly when the newsletter goes live. So if you love the newsletter, if you want to make sure you see every single one of them, you never miss a great video here from School of Trade, join the mailing list. All I need is your name, your email address, hit that subscribe button, and don't forget, guys and gals, when you hit that subscribe button, your job isn't over yet. You still got to go in and check your email for that welcome email, because inside the welcome email is a bunch of free goodies for you, as well as a verification link. I need you to click that verification link. That way I can get approval to keep emailing you when our nightly newsletter goes live. And a heads up on that, sometimes that welcome email gets stuck in your spam folder. So if you don't see the welcome email in your inbox, check that spam folder. It's probably hanging out in there, and make sure you whitelist us if it's hanging out in the spam folder. And then don't forget, guys, I love all the questions. Boy, we had so many great questions that came in from last night's newsletter. Love having you guys post your questions. If you have any questions about anything that I'm talking about here today, the strategy, the technology, the psychology, whatever, right? Whatever questions you might have, especially if you're a new trader, I'd love to help shorten up the learning curve for you. So if you have any questions, type those questions in. And you know, one of the things I always ask you down in the comment section below, what do you love? What do you hate about this video newsletter? Or more importantly, what, in your opinion, what's the most important thing that I can teach you every evening, right, on your journey to becoming a confident and consistently profitable trader? You know, is it technology? Is it strategy? Is it psychology? Is it mindset? Is it trade management, entry patterns? In your opinion, right, in the comment section below, what's the most important thing that I need to cover more of on this video newsletter? So drop those comments in the comment section below. And while you're down there, by the way, hit that thumbs up button for me if you would. If you tune in every evening and love this video newsletter, if you use it every day in your own trading, right, help me expose this video to other traders, right, who would love to learn this strategy by hitting the thumbs up button and subscribing to our YouTube channel. And don't forget, if you guys have any questions, I'm always here. Please don't be afraid to pick up the phone and call me in the office, right? I realize that most websites are all automated robots and widgets and stuff like that these days, but I'm kind of old school. You know, I've been doing this almost 15 years now. We are a small family-run company here in Los Angeles, and when you call the office, we pick up the phone and we actually talk to our clients. So don't be afraid to call that toll-free phone number. I'm always here working hard for you guys and gals. So don't be afraid to call the office if you have any questions about our free trading courses, our free pass to our trade room, or maybe you want a good introduction to a good broker and you want to know where the best rates and fees are right now. Don't be afraid to call that toll-free phone number or use that live support tool in the upper right-hand corner. In the meantime, though, let's get this party rolling here. We got to get you ready for the ball, Cinderella. Let's do this. Tomorrow, Thursday, November the 21st. Now, again, as I mentioned, right, there is a sense of urgency as we go into the end of the week because last time I checked, next Thursday and Friday are the Thanksgiving holiday, right? I can already smell my aunt's stuffing, right, from 10 miles away right now. I'm pretty excited about next Thursday. But I'll tell you right now, a lot of traders are probably looking at the calendar saying, I better make some moves this week because I got tomorrow, Thursday, Friday is always a question mark. You never know what you're going to do on Friday. Then that leaves really Monday, Tuesday, and kind of the first couple hours on Wednesday next week. So time is of the essence if you're a trader. Now, I'm not saying that we should be doing that, but I'm saying that's the collective mindset of the market. A lot of inexperienced traders, they will let this sense of urgency get under their skin. We don't do that in our trade room, right? You don't do that in your trading. We take the patterns the market gives us. We don't force the market, but there will be that sense of urgency, though, from traders around the world who have no choice. They've got to keep trading, right, their clients' accounts. Their boss will be breathing down their neck to get their numbers in line into the end of the month, and they've really only got about 4 trading days left to do it. So we do expect to see some volatility kicking up in the next couple days here, and of course we got a bunch of news tomorrow, as you can see here on the schedule already planned out in front of us. As you can see, tomorrow morning we kick off tomorrow's session with some Philly Fed and some jobless claims at 8:30 Eastern time. Now honestly, these are not the biggest news reports. They're really not. They look pretty good. It looks like, you would assume that jobless claims is a big, important number. It really isn't. The Philly Fed Business Outlook survey, it is, but I really think the big news tomorrow is going to be that 10 o'clock existing home sales number. We saw, 11-year high on the housing starts. The housing starts on Tuesday crushed the numbers they were expecting. Some folks, in fact, are calling it kind of like an exhaustion print, right, as a sign of a pullback in the economy. But as of right now, though, home builders are very, very confident in the long-term economy right now, according to how many housing permits were approved last month. Will that trickle into the existing home sales, right? The existing home sales, if we can see a strong number tomorrow, that will be a stamp of approval. We've heard from the Fed, we've heard from the housing starts, we've heard from pretty much every economic indicator. Even manufacturing last week rebounded. Will they have a rebound in the existing home sales number? This really is kind of the black sheep of all the news right now. We have seen some lagging existing home sales, right? This is the resale, right? The resale market, right? Not the new stuff. The housing starts are the new homes, right? Emerging markets, everything out in the Southwest, the Midwest, right? The existing home sales, right? This is stuff that really, really is a more short-term indicator of how the market is doing right now. Everyone will be watching that very closely, I would assume, tomorrow morning at 10 o'clock Eastern time. And I'll tell you, if that number is a positive number tomorrow, I would expect the S&P and the Nasdaq and a lot of the other equity indexes to really become very bullish. As always, we're not going to trade the news. We're going to trade the reaction to the news tomorrow morning, and that news report at 10 o'clock, we should be seeing some good opportunities here, right, after that 10:05, 10:15, 10:20. Don't trade the news. Wait for the news. Trade the reaction. And as always, we do that together every morning in our trade room, starting off at 8 o'clock Eastern time. One of the nice things about doing it with us every morning in our trade room is the fact that you don't have to go out there and stress out and be over trading and lose a bunch of money like I did when I was a rookie. When I was a rookie, I was doing it on my own, right? Just trying to test indicators, and boy, I lost a lot of money doing that. One of the nice things about doing it with me every morning in our trade room is that you can do it with confidence, do it the right way the first time. All right. Speaking of doing it the right way, let's get some charts ready here and get ready for tomorrow. Tomorrow, of course, is a Thursday. Let's jump into our charts here, right? And let's grab some oil. Got some oil, some S&P, some Nasdaq, and some gold. We'll start off on that black gold. What do we know right now? We know we're bullish. We know that we've started going sideways here with lower highs and higher lows. And, really, guys, when it comes to this particular pattern, there are really two types of buy patterns you want. One is a move below the range. The other, of course, is the move above the range, right? And these are ultimately the two types of trades that we're looking for here. So let's start with the first one. Okay, I've got a triangle. Anytime I see a triangle, triangles are such great patterns because they tell you exactly where to look for the entries. Find the swings. Right? Find the swings. So find the swings above, find the swings below. Now, we're bullish So I want to be a buyer. So I'm not going to worry too much about the swings above, right? Those aren't really that big of a deal. But the ones below me, these are where the gold is, right? This is usually where those swings are down here. This is usually where the buyers are waiting, right underneath that triangle. Now, as you can probably assume, if I try to buy underneath that triangle, I've got a big old trend line coming down right overhead. And remember, we talked about this last night, right? Anytime there is a concern about having a level of resistance overhead, what's the best type of pattern? Remember that from last night? It's called a trap pattern. Now, what I'll do is if we can get that pullback going lower, what I'll do is I'm going to wait for that move back to the moving average. This is where the magic happens. This is where I want to see these sellers try to sell off the moving average. Now, I would normally be a buyer right into those stop losses and run this thing back higher. But this is where that resistance trend line is a big, big clue. I'm going to skip the original failure pattern and try to see if I can get myself into a trap. We may not get it. I'm gonna warn you right now. Sometimes these things will shoot lower and then shoot right back up again. But the most reliable trade here in this first battle zone is going to technically be what I call a nested failure pattern. Really all it is, it's going to be a deep pullback. Well, not that deep, right? But a pullback into the first buy zone. Get the moving average coming down. And now we got to find a way to get trap on this. What's going to happen is, that's not the trap I was talking about. There we go, right? What's going to happen is, as the moving average comes over here now, the bears will try to sell it. Okay, that would usually be a failure pattern back in. But something tells me they're going to have a trick up their sleeve, and I want to see a second, right? At the very least, a second try here from those sellers. And the ideal, right, minimum would be a double bottom. Ideal would be a trap off of that low, right? A trap off of that low. That's going to be really the more aggressive of the two scenarios. And again, where's my target? Target's going to be trend line overhead. Target's going to be back to retest the high. And then if we leave a runner, the runner is $58 a barrel. Now, that was one of them. How about a second example here, right? What if we don't get that? What if we run down into this secondary buy zone? Okay, this is what I hope we get tomorrow. Because if we can get that tomorrow, now what I can do is I can wait for those bears to come back, try to sell off of it, and now I've got a great chance here now to risk small and earn large going back up. That's going to make this a very attractive buying opportunity. And what is an attractive buy is a reliable buy. When everybody sees it and everybody wants that low risk, high reward setup, it becomes a very reliable, right, setup we want to take. I'm looking for a failure pattern, and then hopefully we'll get that pullback combination as it comes off. Where's my first target? Target back to the top of that channel, or back to that trend line. Second target back to the high of day. Third target all the way up at that 58. Does that make sense, guys? So we go through the short-term battle zone. Moving average comes over. The bears come in. They're going to try to sell it, right? They'll try to sell it. And when they do, we'll know exactly where their stops are. And we can be a buyer right into those stop losses. And then again, a lot of times what will happen is the market will come over and then pull back to the moving average shortly after we get that failure. So that's a failure pattern into a pullback combination. So now we've talked about three different price patterns. What if the market goes sideways? Do we do anything? Any special plan for a sideways? No. Want to sit sideways, right? If it wants to go sideways like this, let it go sideways. We still want to get down, right? Get those bears to try to sell off that pullback, and then we can make the run back up into that trading range. So if it goes sideways here for a while, not a lot changes. Right? Not a lot changes. We still want to get underneath that range, look for a seller failure pattern, and then buy it right back up. Now, you might be wondering right now, right? What if the market keeps going? What if they do hold that pullback here? What if we run lower? When we get the pullback to the moving average, well, what if they hold it? Right? What if they jump off that moving average? That's a reversal. Okay, we called it a 1, 2, 3 reversal. 1, 2, 3 reversal. So you might be asking, right, well, how do we know when does a pullback turn into a full reversal? Once they hold the pullback on strength. Once we see them hold that pullback, once they sell off that moving average and we see it jump off the moving average, now we know this is a bear market. Now what do? We mark up that first low. We mark up that trend line now. This is the secret right here. Mark that trend line right off that low. Then what I'll do is I'll go back up top, find that hidden channel, and we're selling now off the top of that hidden channel. Where's my target? Where's my target now for this 1, 2, 3 reversal into a hidden channel pullback? Where's my target? Believe it or not, it's all the way back down. In this case, that 55.40, 55.30 area. Maybe it goes all the way to 85, but probably going to be back to that little range we had back there at 55.40, 55.30 area. Now, the $1 million question, what if we push higher here? What do? What do we do if we try to break out of a range? There are two very reliable breakout patterns. I don't trade breakouts. Breakouts do not work very often in liquid markets. They might work in penny stocks or cryptos or whatever, but you're not going to have much luck trading breakouts in liquid markets, right? Blue chip stocks, basically all the futures markets you see me trading here tonight on this newsletter or analyzing tonight on the newsletter. So breakouts are not very reliable. It could easily jump up and come right back down again. And so what I've got is two patterns I'm looking for here on this. One of them is called a 1, 2, 3 breakout. Strong move up, then the moving average comes over, the pullback to the moving average holds, and the buyers jump off the moving average. This is just like a 1, 2, 3 reversal. It really is, right? 1, 2, 3. 1, 2, 3. Strong move up, pull back to the moving average, and jump off. Now, you might be asking, well, why not buy that pullback? Well, if you haven't realized this yet, right, a lot of those breakout pullbacks, they end up failing. In fact, what I'll do is I'll actually look for that breakout pullback to fail with what I call a trap high and a crown reversal. Okay, so if you do want to sell that breakout pullback failure, look for those buyers to try once, look to try twice. Look for that trap. It's so bullish, you want to get that trap high. We call that a crown reversal, right? I don't trust those breakout pullbacks, but I know that a lot of rookie traders love those breakout pullbacks. So anytime I see the breakout pullback, I'll let them give it a couple tries. I'll look for a trap high, and I short it back down into that trading range. We're not talking about that, right? We're talking about a strong move up, a pullback to the moving average, right, and a strong move off the moving average. That's a breakout. That's a continuation from this consolidation. What do we do here? Mark up that high, then draw the trend line, right? That's the secret. And then off that low, we find that hidden channel, and we buy that pullback to the sweet spot there, right? 58 even, 58.01, 58.05 up there is that next level of resistance. But what if we don't get that perfect 1, 2, 3? What if this thing just jumps? You know what I mean? What if something happens overnight and the market just takes off like a rocket ship going higher? What do we do then? I got a pattern for that too. It's called the FOMO breakout or a 2-try breakout. If we see a real strong break higher, right? Real strong. Now what you want to do is let those bears try once, higher high, let those bears try twice. And once we see the bears trying, strong move up, bears try once, bears try twice. Once we get those sellers, right, trying twice up there, now I know I've got stops sitting right above that high, and I'm buying right into those stop losses. Now be aware, that has to start with a very strong move, right? Very strong move. If not, you want to wait for the pullback and wait for that 1, 2, 3 breakout and then find that hidden channel and buy the low of that hidden channel. All right, so we know where the buyers want to get in. We know where they want to get out. We know where the sellers want to get in and where they want to get out. Now all you need is to learn more of the patterns. And that's why we have our free course. If you want to learn more about all my favorite entry patterns, you got to check out the free course. It's linked up in the upper right-hand corner. Okay, you'll learn all my favorite patterns, my 3-step strategy. I'll even send you an invite to join me as a guest in the trade room on a free pass. So grab that link in the upper right-hand corner. I'll put a big red button, by the way, underneath this video if you're on the blog at Sideways Markets right now. But grab that link. Not to worry. Pause the video if you want to. Get registered for that free course. That way, by the time we see each other tomorrow night on the next edition of our newsletter, you'll have the free course. You can log into the system on our website. You can see hundreds of examples of those patterns, and you'll be able to follow along a whole lot easier. All right, we're looking good. So oil is also to go for tomorrow. How about some S&P here? Okay. S&P, as I mentioned in the introduction, spent a lot of time this morning kind of hanging around that opening bell price, right? Market opened up, ran lower. They came back up, they filled the gap, and then, of course, they ran this thing going lower. Now, that big, strong move down, that move down is a pretty big clue, because anytime we see a very strong move like this, we always know there is that lingering chance they're going to make a run here out of nowhere and retest that low, right? That's always a threat. This is one of the big reasons why one of the things on my checklist, I use a checklist to trade with every morning in our trade room. And one of the things on my checklist is, where was the last big strong move you see on this chart? In fact, if you want a nice easy way to start your day today, right? Here's actually a good trick here. One of my first trading coaches told me this. One of the easiest ways to start your day is to open up your charts, right? 2 or 3 different markets, and look for a big strong move. Because once you see that strong move, again, when you see a strong move, you're going to probably get another leg in the same direction. And then look for trades to go in the same direction to retest those highs, right? It's a pretty simple way to do it. It's a very easy way to just kind of cut right to the chase. When you open up your charts in the morning, just look and see, do I have any big strong moves on the chart? Because usually that strong move will retest at some point, right, in that trading session. So we have this big strong move. And over lunch, when we get that big move down, you would have thought those bears would get that run back down again and hit it. In this example, though, they didn't. And we may not be out of the woods yet, but we're looking pretty good here at this point, right? The bears tried once, they tried twice. Usually after they try twice, they're gonna fail. And it definitely looks like they have failed. Now, as I mentioned before, though, right, I hope that these sellers try to get a nice, right, shot going lower. I hope they try to get that run going lower, because we know the market's bullish with the 1, 2, 3 reversal. We can easily see they drew off the highs, right, off the low. We know they bought it. We know the market's bullish right now, and so I want to buy at support. Okay, where can I find some levels of support? One of my favorite tricks is to draw a trend line off the highs. Anytime I see a reversal, there's always going to be some highs that you can use, right? See how well those highs line up? Now, a lot of people, when they draw channels like this. Kind of those textbook channels. The problem is that textbook channels, they only work really well in textbooks, right? They don't work very well. This, by the way, wasn't a regular channel. It was a 1, 2, 3 reversal, right, into a hidden channel pullback, right? Same idea. Draw the channel off the highs. So I'm doing the same thing right now. I'm going to draw my channel off the high, bring it down to that low. Look at how beautiful those lows are. I mean, this thing is just begging to be used as a level of support. So that's a key level of support for tomorrow. I also love me some expanding triangles. You can see how this is kind of setting up as an expanding triangle. This has delicious written all over it for the bulls tomorrow, right? Bulls will love on that, right? On that support trend line. And then, of course, the big round number, that might also be something, right, to add on, right, to that level of support. So what I'd like to do is get that pullback down to that support area and buy it back up. At the same time, right, again, like I mentioned in the introduction, we really should have gone higher here. It really should have run higher here. So I definitely have to be ready for if this market does push higher. So first of all, though, right, if I can get this pullback to the low of that channel, that puts me right about that 31.18 area for our measured move. So let's talk about that first, right? What if we get that pullback? Now, a lot of this is very similar to what we just talked about on crude oil. We get the pullback, right, down into our support zone here, below the prior swings, down to the low of that channel. Now what? Now the moving average comes over, and most of the time what's going to happen is you're going to see this pattern, right? A failure into a pullback combination. Okay, this pattern happens over and over and over again. A failure into a pullback combination. Learn that pattern and keep in mind, okay, we don't take the pattern everywhere. In a bull trending market, I want to find that combination pattern at the low of a channel. In a range-bound market, we'll find that pattern below or above a range. So context is important on this, right? We don't just take patterns. You know that, right? We don't just go looking for patterns. We look for the patterns in the right locations. Location, location, location. It's not just for real estate, right? It's for trading too. Because if I can be a buyer down the low of that channel now, what does that give me? It gives me a small risk for a much bigger reward. And what does that mean? That means a lot of people are going to want that trade too. And when a lot of people want that trade, what happens? It's a reliable trade. A desirable trade is a reliable trade because of what? The self-fulfilling prophecy, right? Everyone piles onto it and it's almost a guaranteed winner. This is why I said last night, know your exit before you take your entry so you can plan the proper entry pattern to make sure you're getting a good risk-reward ratio because a desirable risk-reward is a highly probable trade. So that's the pattern we're looking for down at that low here. Now, what if we keep going higher here? I think that's kind of the big question right now. What if we keep going higher? Again, I would imagine, as I mentioned in the introduction, this is kind of that bottom we had here. Okay, this is where I would imagine we're going to probably get that next shot going lower, right? Off that high there. They've been using this area. Maybe it's, it could be a little bit higher there. Probably not though. It's probably somewhere around that spot we have right now. But again, we've got to get through this area first, right? So I would say as we go higher, if it just kind of sits like this and bounces, we're still waiting. We're still waiting for that pullback, that failure, and to be a buyer. So we really got to get kind of the prerequisite of this is we have to get this thing pushing higher here above that 31.11. Now, like I mentioned before, right, we get some home sales numbers tomorrow morning at 10 o'clock Eastern time. This could be, right, this could be the path up to retest those highs. I don't want to get ahead of myself right now, but that is definitely potential as we go into the end of this week. So we'll hear more tomorrow. We'll see if that news does spark this rally. But here are really kind of a couple scenarios that you want to think of. We know right now the buyers have one goal in mind. The buyers want to get back up to retest that 31.19. How do I know that? Why do I think 31.19? Because that's today's high, right? That is today's high. And anytime a market goes up and comes down and then reverses, the bullseye, it's right on the retest of that high. Okay? Now, that's important stuff because if we get a run going higher here, and I know where the exit needs to be, I know where the objective is now that helps me plan the right pattern, doesn't it? What's the best, this thing runs higher here, what's the best pattern for me to avoid buying high and to participate with the move going higher? That 1, that 2, and that trap. So the bottom line is if this thing really shoots higher here, find the prior swing and look for that trap pattern. Look for a trap on it. Okay, traps come in all shapes and sizes. Want to go up, 1, 2, trap and go. Right? I want to go up, 1, 2, trap and go. Let the bears try once, bears try twice. Hopefully they'll give us that trap as we go. Beautiful. Another thing you want to keep in mind is we run up and we can't get through it, right? We go sideways up here. Perfect. Sounds good. This prior resistance now acts as support. And now, what's the best pattern for a range? A 2-try pattern, 2-try failure. Remember, it's a bull market. I want to buy underneath the range. Let them go lower. Let the bears try. We call this a 2-try failure pattern. Let the bears try once. Let them try twice. And again, imagine here a breakout pullback, right? Again, like I said earlier, traders love breakout pullback patterns, but in liquid markets like the S&P, it ain't going to be a very reliable setup. So once we get those bears, try to get it going lower, get the moving average coming over, let those sellers try to sell into it and run it back up into that trading range. Or if we really get lucky, we get that 1, 2, 3 run. And when you get a 1, 2, 3 run like that, just mark up the high, mark up that low. And as you probably have learned, and I mentioned this a lot last night on the newsletter, when you get a good 1, 2, 3 breakout in this case, right, it's almost a guarantee you're going to get at least the first target on that pullback, and we'll leave the runner to see how much more we can get as we go. All right, so definitely keep your eyes open for that move higher. But again, know where the buyers want to go. That's the key, right? If it runs higher, don't just buy it. Trap low, trap low, trap low. Okay, what if we go lower here? This is definitely viable. This is definitely possible for tomorrow. We got that big move down. They could easily run this thing lower here. Easily. Okay, so here are three things. Here are three scenarios that you want to kind of be, just mentally prepared for if we retest those lows. If we go back and retest those lows, that is a stamp of approval for the bears, right? Because the bears, they want nothing more. The bears want to go back and retest the low, just like the bulls want to go back and retest the high. Okay, so the bears want to get back down to retest their low. If they get down to that low, I've got three things to watch for. One is a crown reversal. 1, 2, buy back up. You know me, I'm always trying to be a buyer off a low like that, but I got to wait for a good pattern. We don't want to predict the bounce. Okay, it's very difficult to predict a bounce off that. Okay, don't try to predict it. Wait for the bears to pull back. What will happen is moving average comes over, right? The bears will try once, bears will try twice. At the very least, a double bottom right there. The best situation, though, is that trap low and back up. Another scenario you want to consider here is a strong move down into a trading range. Okay, this will be probably the hardest part tomorrow. If it runs down to that low and then stays down there, right? We're talking a good couple hours sitting down there. The longer it sits, the more likely it is to hold at those lows. And if we see it go sideways for a range, what's the best pattern for a range? The 2-try failure pattern. In this case, now we're bearish. We go down to retest that low. We know we're back to the bear's hand now. 1 try for the bulls, 2 try for the bulls. Make sure, remember I always say, make sure there's 2 clear tries on this, right? 2 clear tries, and then we'll sell it back down into that range. Now, could this turn after that? It could. Right? So it could go 1, 2, 3 back up, and we might find ourselves now looking to be a buyer off the low of that hidden channel. Do you see how this all comes together? Right? When a market's in a range, trade the range. What's a breakout looking a range? 1, 2, 3 breakout. Hidden channel pullback. Okay? Where's my target? Back up to retest the high again. All right, guys? So watch out for that trading range. The other scenario would be we make the run lower, we hold the pullback, and we keep running lower. Okay, this would be the extreme here for the bears, right? We run lower, we hold the pullback, and we keep running lower. Okay, now at this point now, what is that? It's a 1, 2, 3 reversal, and we're showing proof we've now broken through that low. I'm going to mark up that low, mark up the new trend line, find that hidden channel, and we're selling off the top of that hidden channel. It's a very easy strategy, but you'll notice, right, I don't try to sell it as it's going down, right? I'll have a very hard time selling it down here. The only way I could sell it really is if I saw it shoot lower and then get the buyers to try once, try twice, and get like a trap up here. You know what I mean? Because you got that level down here. You don't want to sell too low into it. So, there is a chance we could thread that needle, but that's a very advanced tactic on that. You really got to have a lot of confidence on it. If they stall out at that low, I'm looking for a buy, right? I'm looking for a trap low on that to buy it right back up. Use that big round number as a magnet. Use that prior low at 31.11 as a magnet and run it higher here, right? Where is my target as we go to the downside? The target of the downside now is all the way down at that 3080 area. So if these bears, if they come out and really hit this thing, right, that 3080 area is going to be our magic number here for those sellers. As we open up here right now in Asia, you'll notice a big gap down here. Give this thing some time, let it work its way back higher, let those bears sell off of it, right, and we are buying back up from there. Looking good. So now we know what we're getting here right now, right? I'm just opening up right now in Asia, and we can see here now a very substantial big gap down. All that does now is put us right into position. It's a very strong move down. Okay, we want to get that pull back over, get that move. You got it, right? Same basic idea here, and we're buying off that low. Now all we need is some more time. Let this trade play out. How about some Nasdaq right now? So Nasdaq, again, very similar here to the S&P. The Nasdaq is making our job pretty easy on this now. We know what the market looks like now as it opened up in Asia. Let's take a look at the bigger picture here. Again, we talked about this last night, obviously. We had that big move up, right? Had this as a trading range. We pulled back. We got the 1, the 2, and right back up into that range that we talked about in last night's newsletter. But then things just get hammered, right? Things just get crushed there this afternoon. So, of course, that big, strong move down is no joke, right? Anytime we see a strong move down like that, we know we're probably going to get at least a good, strong try at that next leg lower. And so, again, you can see right now what's happening is they got a pretty strong try. They even gapped down here, for crying out loud. It's a pretty impressive little gap there. And that puts us pretty much right where we want to be. Not a lot has changed here not a lot is different between the Nasdaq and the S&P, right? The S&P has that level up top there, right? There's our level of resistance. That is definitely going to be a big milestone for us. And now, if I can draw this one up like that, now we know, yeah, there's our measured move just above that 8,300 level here on the Nasdaq. Nasdaq, as we go lower, let me clean this off here real quickly for us. As we go lower here, the bears try once, the bears try twice, right? We get that pretty obvious 1, 2, 3 reversal. Mark up that high, mark up that low. The buyers definitely bought off of that low. That's why I say always look for that pullback, to that hidden channel pullback. It's a great, easy first target. And then sometimes it keeps going. In this case, it didn't, right? In this case, it comes tumbling back down. And again, it's no surprise, right? Look at the strong move as we go lower here. So strong move down. They're trying to run it lower. That's exactly what I'm looking for here. And I was thinking earlier, as I was prepping these charts right now, I almost drew the channel like this. I almost drew that channel like this, and it looks like I was right. That's usually a channel that flat, right? If you look back at the S&P, that's how I drew the S&P channel, right? The S&P channel was drawn off that pullback, right? And that's a beautiful looking channel right there. That should be a nice little setup for us off of that low. But the Nasdaq, though, see what I'm saying? You could draw that channel off this high, but it's just ridiculously flat. But that's what they're using, right? That is what they're using. What I'm doing is I'm trying to find some level of support by using those highs and then bringing it down to that low. See how those little wicks right there? Bounce, bounce, bounce. That's the giveaway right there. These are the small details that lead to a confident trader, right? These are small details, knowing how to draw channels properly, knowing what a reversal looks like, et cetera, et cetera. Now, what do we know right now? We know the market turned bullish. Okay, we know that for a fact. We know that unless these bears can hold this move, we should not trust this pullback, right? And guys, I don't care about the gap. The gap has nothing to do with this. Because if you ask my opinion, a gap down is a big red candle. Okay, so I don't want to hear anything in the comments section. Is the gap the magnet? Well, most gaps get filled. We know that. But don't let that statistic cloud your judgment. We know that most gaps get filled, but right now there's plenty of gaps we've had in the last couple of weeks that have not been filled yet. There's no guarantee that gap gets filled. So I'm not using the gap as the magnet. I know the market turned bullish. And because of that, the only way this thing turns bearish now is to hold that pullback, right? Hold that pullback and run. That's the only way it turns bearish. And again, the hard part is if they do hold the pullback and run, we find ourselves right back to that low. And that is it's too low to sell. I'm not going to sell down there. So this is the big problem we have for the bears. The bears are really not in a very easy spot here right now, especially with that big gap down here. So just like the S&P, I'm hoping they pull back to support, which they already did. Then the moving average comes over. I would expect once this moving average kind of catches up to this candlestick, gaps down, the moving average has to kind of catch up, so to speak, right, to the price action. We'll wait for those bears to come in. If I can get that failure, I'll buy into those stops, and then hopefully get that pullback, right, and get that pullback off the low of that or off that moving average comes over, right? So failure pattern into pullback pattern as we go higher. Now a heads up on this, sometimes we don't get that pullback. Sometimes it runs up, right? Sometimes it runs up, shallow pullback, and if that's the case, trap, right? Look at that trap. If there is this much momentum going higher, this is the way that I think about it. If there's that much momentum, the momentum is that strong going higher, a lot of buyers are not going to want to wait for that pullback. They're going to jump in as soon as they get that little trap low. So that's another pattern to keep in mind for tomorrow, right? So the ideal is we go down. Again, it's a bull market. So anytime I see a seller try off the moving average, I'm looking to buy into their stops. The ideal scenario is the pullback pattern. If we don't get the ideal and it runs, look for that trap. Make that red, right? Look for that trap. Okay, those are 2 setups to look for, 3 actually, right? Include the pullback pattern as well. Where's my target on that one? I got that trend line coming down overhead. So what I would do is take a big chunk off the big round number. Okay, it's a big magnet, and then of course leave that second target up to that trend line overhead. All right, guys. What else? What else might happen here? The market may rebound and run, right? It may come roaring higher here, right? If it rebounds and runs higher here, what do we do? Right? If this thing just takes off and runs, right? Takes off and runs. Your job right now is traps, right? Find that trap. You know they're going. They're gonna make a run back to that trend line. So if we just start seeing this thing really cook, okay, I wouldn't go jumping in too early on this, but once you see it continuing here, no deep pullbacks, right? It's not pulling back to the moving average, right? It's not pulling back to the moving average. The minute you see a market that doesn't pull back to the moving average, your only option is a trap low, right? The only option is a trap low on that. So if it just cruise higher here, now you know, right? Get more aggressive. When the market gets aggressive, we got to get aggressive along with it. If it's not pulling back, right, grab that trap low. Just don't buy high. Buying high works every once in a while, but it's not going to work every time. Traps are almost bulletproof if you do it the right way. All right, now, as we go higher here, right, don't forget we may go up and go sideways at some point up here, especially since we have this trend line coming down overhead, right? That trend line overhead. I'm not too worried about the trend line, to be very honest with you. I don't think this trend line really stands a chance in the big picture, but I do think, though, if the market runs up to it, you'll have to really make sure you keep your eyes open for those traps. Right? You don't want to be buying into that overhead resistance, right? So just kind of keep it in mind when there's overhead resistance like that, you want to be thinking trap low, just as we talked about on the oil and on the S&P. So as we go higher here, keep your eyes out for ranges as we go up into that trend line, right? If it does go into a sideways range up there, it's a 1 try, it's a 2 try, it's that 2 try failure pattern. As we talked about already a couple times here, it's a bull market at that point into a range. We know we have some resistance overhead, so we've really got to make sure we're disciplined to buy underneath that range tomorrow morning, right? Last but not least here, how do we sell this thing, right? What's a sell look like? It ain't looking very good right now. How does a sell look like? A sell would have to go back to retest that low. And if I get that move back to retest a low, the first thing I'll look for is a crown reversal. 1, 2, trap and go, right? Just because, again, we know that the bears, they want to get back to retest the low. Once they get that retest, a lot of times it comes right back up and forms a range, right? One big range here. So if they do get that retest down here, wait for the bears to try once, higher high, try twice, and then look for that trap low for, again, what do we call that pattern? It's called a crown reversal pattern. I've got a ton of examples of that pattern for you guys inside that free course that I mentioned earlier, so make sure you grab that. If we do run lower, right, they hold it, we run lower, watch out for that range down there. That's a bear market at that point. If it does go sideways, you no longer want to be a buyer on this, right? If we stick down there, remember, the longer we stay pinned to those lows, think of it this way. The longer we stay, every minute that passes that we stay stuck on those lows is like another vote being cast for the bears, right? Vote bearish, vote bearish, vote bearish, right? Every time they stay at those lows. Okay, if they bounce off the low, we'll see now bears try once, bears try twice, we're gone. Okay, but if they run down and they bounce, what's happening here? What's happening? The bears are coming in and they're absorbing it, right? They're mopping the floor with those buyers. The buyers are trying to come in and the bears are saying, keep it coming. I'm here all day. And the bears will keep on trying, right? And they'll keep holding it. That's why after a while, if those bears sit for a while, we know it's a range. And we know the bears mean business. We don't want to buy into those bears now. What we do want to do, though, is let the market try to go higher. Eventually, those bears, the sellers who are selling here, they're going to start shooting blanks, right? They're going to run out of bullets. What's going to happen is they'll start looking to sell higher now. There's only so many sellers that will try to sell right above the range. Once they run out of their bullets, then the next sellers will come in at a little higher price, right? Sellers want to sell high. Buyers want to buy low. And that's exactly why I like to see those breakouts. Because once we see that breakout, what's going to happen? The rookie traders, right? The 10-year-ago version of me, when I was a rookie, I would have said, aha, we're reversing. I'm going to buy the breakout pullback, right? I'll use some momentum divergence down here, right? Some order flow, you know what I'm saying, right? I used to love breakout pullbacks with all these crazy indicators, trying to filter which breakout pullback would work. I'll save you a bunch of time, right? None of them are very reliable, and that's why if the market stays bearish like that, we're going to sell right into those stops, right? Let those buyers try to reverse it. Okay, but I'm not going to do that. I'm looking to sell this thing right back down in because, again, the longer we stay down there, the more votes being casted for those bears. Now, if we do run lower and we sit and we sit and we sit and we sit, right, and then we get that 1, 2, 3, perfect. Now, mark the high, mark the low. There's the buy I want. That's the one I want. Because now the bears are tried once, the bears are trying twice, support there, bingo. That's easy money right there. That's easy money, right? That's this one right here, 1, 2, 3, right? They run up, low, low. Again, that's an easy trade. It is. But what is not easy is waiting for it. Okay? And believe me, the only way I learned this was because I was always trying to buy that pullback. And once I stopped buying the breakout pullbacks and I waited, I began to realize, holy cow, there's a lot of good patterns here if you just wait for them. You know, a lot of times though, as new traders, we don't know any different. We don't know what we're looking for. And because of that, we're on the edge of our seat and we're in, we overtrade, right? Our brokers love it, but our accounts hate it. Okay. So we know that's the key. Oh, come on, right? Or it runs lower, right? We chop, chop, chop. We make a strong jump higher. Okay, now that's a good breakout there. 1, 2, trap, and go. The 2 try breakout pattern as we go. All right, guys? Now, also, too, if the market runs and keeps going, right? Runs and keeps going. That's proof. Mark the low. Mark the high. Selling off that high. All right. I think we've covered all the bases here now. A lot of this is the same as the S&P, right? The only real difference, though, is that trend line coming down, right? Again, I don't anticipate that trend line to be a deal killer here, but I do think that trend line will tell us buy nice and low, right? Just don't buy into it as we go. Maybe get lucky, get that trap, and use that trend line on the other side of it. Those will be some tools we'll use here tomorrow with our clients in the trade room. Last but not least here, what do you got for us, gold? Let's take a look here. Gold, of course, is bullish going into that trading range. We had that beautiful range-bound market, right? What does a range-bound market tell me to do? What is a range? A range is a balance area. Okay, in my trade room, we always remind ourselves, ranges are balanced. Trends are on a mission. Ranges are balanced. Trends are on a mission. Trending markets are trying to get somewhere. Range-bound markets are happy right where they are. Trending markets, right, they're hustling, right? They're grinding. They're trying to get somewhere. Range-bound markets, it's easy as a Sunday morning. Kick back and relax. They're already there, right? They're happy right where they are. So when I see a range-bound market, I know that's the balance area. I know that's the magnet. You know, if you're a market profile theorist or an auction market theorist, right, that's where the volume piles up. And we know based on market profile, I'm not going to get too detailed on this, but we know that high volume area, right? That high volume area right in the middle, we know when the market goes down, what's going to happen? It's going to probably come right back to that high volume area again, isn't it? That's where price is accepted. That's price acceptance there. Again, the longer we stay up there, what happens? The more votes being casted for that price. So when the market pulls back like this, what happens is you get a bunch of rookies that go chasing after it. They try to sell after it. They try to sell off that pullback, and the market just goes whoop, 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 right back up into the range again. Why? Because, again, it's a magnet. The price is the price is all that the market never lies. The longer it stays there, the more accepting it is of that area. So now when I go look at my gold right now, right, I've got that strong move up. They are loving on this 1471.9, right? That's this area right here. Again, if you put a volume profile on it, all the volume is piled up right there in the middle. So anytime it leaves, and again, I don't use volume profile. I don't think you need to be honest with you. Anytime you see overlapping candles, anytime you see a moving average flatten out, okay, anytime the bulls can't hold, the bears can't hold, it goes sideways, that's what the volume is. You don't need a bunch of those expensive indicators. You just got to know how to read a chart. That's all, right? That's all. So as we go higher here now, is this a good place to be buying right now on gold? No, it's not. In fact, it's a horrible spot to be buying right now on gold. Why? Because we're above the buy zone. We're above the magnet. We're above the balance. So when price goes above the range, what happens? It comes almost always, not always. There are breakouts that happen, right? You know, even a broken clock is right twice a day. There's always an exception, right? There will be that breakout that works. But how do you know, right? How do you know if this breakout or that breakout or this breakout or that? How do you know? You don't. And that's why I hopefully you listen to me, take my advice on this. Don't waste your time trying to go after the breakouts. There's so much better patterns out there. While you're trying to filter out the losing breakouts, you're missing, right? Wait for a successful breakout and then find that hidden channel. You got it, right? And then know where your exit is. Okay, so we know it's a range. I want to be a buyer. I want to buy because it's bullish going into that range. I want to find levels of support, okay? In a bull market, into a range, find levels of support. Now, I'm a big fan of what's called an expanding triangle. So imagine, right, two trend lines here. I'm a big fan of these expanding triangles. They really help you find those low risk, high reward bottoms. Remember, it's all about finding low risk, high reward trades. Why? Not just risk reward ratio, but for reliability, right? A good reward that only requires a small amount of risk is what? A desirable trade. And desirable trades are profitable. They're reliable trades, right? Forget about the profit. Right? Stick to reliability. You know, what's the use of having a Ferrari in your garage if it never starts? Right? I'd rather have an old beat up pickup truck that starts every single time. Reliability is all that matters. Well, as long as you got your priorities straight. Okay? We want reliable. So I got my support level down there. Also, take that trading range. Okay? Take that trading range. The size of that range, that creates that buy zone. Now, you'll learn a lot more details of how we find those ranges inside that free course. I'm not going to go into all the details tonight. That's what the free course is for. So grab that free course linked up in the upper right-hand corner, or, of course, right, that big red button below the video tonight on the trading blog. And so I've got this whole area of support. Now, the key is, right, here's the key. The key is if we get a relatively shallow pullback in this first zone, then what I look for is, I'm looking for a straight failure pattern. Strong move down, pull back to the moving average, get the bears, try to selling off the moving average, right? And we'll try to buy it right back up. It'll look a lot like this one. We go down, the bears try to sell off, again, off the moving average, and we're buying it right back up, right? So similar looking pattern, and ideally, off that trend line would be beautiful. Strong move down, pullback comes over, right? The bears to sell off of it. We know where the stops are. And if we get lucky, maybe a pullback afterwards. The problem is oftentimes that pullback happens too close to the range, right? That pullback oftentimes happens too close into that range. And I try to stay away from trading inside the range. Buy underneath that range. Don't buy inside the range. But let's say, for example, we really get crushed and we run down to that second deviation. If we get down to that second deviation, at this point now, that momentum is a big deal. And when momentum, well, we talked about this, right? Anytime we have a strong move in one direction, what usually happens? We usually get a very strong attempt at another leg. And so it's not guaranteed, obviously, right? But we'll expect those bears, they're going to go down swinging, right? They're not going to get 3 strikes. They'll get 2 strikes, 1 and 2. The markets love to move in 2s. We talked about that earlier this week in the 2-try rule lesson, right? But that would be your, what we call a nested variation of the failure, because there's 2 patterns, right? There's 2 failures. It's a nested variation of that failure. Does that make sense? Right? So again, a shallow pullback is a straight failure pattern. A deep, deep pullback, grab the nested instead. All right, guys? We don't need a crown reversal, right? We want a nested pattern instead, though. As we go, what if we sit here for a while? If we sit, nothing changes. Wait for it. Buy underneath that range. Okay, what if we go higher here? This is where you got to know your exit before you pull your trigger, right? You got to know your exit. Where's my exit right now? If I look back in time, there's a beautiful resistance level right there off those prior swings. That is one big monster range from October, right? That is the magnet. That's where they want to go. However, I would imagine a lot of bears are going to defend that area at 1485. Why is it important for me? Because I want to be mentally prepared when this thing tries to shoot higher. If it tries to shoot higher, I know I'm walking right into the bee's nest up top there. So I've got 2 patterns. One of them, we've covered them both here. But because there's overhead resistance, it's going to be a 1, 2, 3 breakout. Mark that low, mark the high, find the channel, buy the pullback. What you don't want to do, though, is I wouldn't take that pattern if it does this. 1, 2, you know what I mean? I wouldn't do it right into that high, though. Okay, if it really runs, use the 2-try breakout pattern with the trap low. Why trap low? Because of the resistance, right? See, there you go. You're picking up on this stuff now. We know there's something overhead. Remember last night we talked about oil? Oil had no resistance overhead, and if there wasn't any concern, it would be a move up 1 and 2, right? Remember that from last night on the oil, right? But because we have resistance, though, we go up 1, 2, trap. You got to get that trap because of the overhead resistance. So 2 patterns. The first one is the 1, 2, 3 breakout. Mark up the high, mark up that low, buying off that low, or strong move up 1, 2, trap low, and up we go from there. Now, what we might see happen is it may jump up and start going sideways up here. You know the drill now, right? Mark the range. The size of that range will make it easy for me now to find my buy zones. Just like the size of this range makes it easy to find these buy zones, right? So if we run higher here, chop, 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 right? The longer we stay there, the more votes being cast. 1 try, 2 try. Again, think of it a breakout pullback, right? Think of that breakout pullback. Let those bears try to sell that pullback going back into that range. At this point, though, if they get a strong run up and we stay and we stay and we stay and we stay, the odds are very low that we go back into that range. Why? Because what is a range? Acceptance. Range is an acceptance. We like this price. Therefore, every time it pulls back, we're buying it. That's what creates a range. The markets never lie. That's why they always say the price is the truth. And it really is in this scenario. Stays up there, 1, 2, buy underneath, and keep going. If they really push, and I'll believe it when I see it, if they really push that 1495.9, that's the home run scenario for the bulls here tomorrow. So now we know what the plan is here. How do we turn bearish? We could easily turn bearish here on the gold, but you know what they need, right? Strong move down. Hold the pullback, and then run. They got to get a nice strong run off of it. Got to be very strong off that low, mark that hidden channel, and we're selling off the top of that channel. Target is back down to retest that low. We may see, don't be surprised, if we get a strong move down, the bears try once, try twice, and back up in. That's what I'll be looking for, right, as we go lower here on the gold. Guys and gals, what a great job tonight. I'm proud of you for sticking through the entire video. If you're watching right now, you are part of the elite traders out there on this YouTube channel. If you're still watching right now, hit that thumbs up button, right? Type in the comment section, I'm still here. I want to see it all over the comment section tonight, right? Let me know you're still watching, you're still here, because whoever is still watching this video right now, you guys guys and gals are the ones I work so hard for you right now, right? So grab that thumbs up button, hit that thumbs up. Let me know you're still here. You are part of the 1% of those traders who will be successful, right? As long as we can just take it slowly, one step at a time, every single day, we're going to get you where you got to be. Don't forget, tomorrow morning and every morning, 8 o'clock Eastern time, we jump together in our trade room. We're going to put this plan together tomorrow morning. We'll up the charts and we'll execute the plan together. Get registered if you're on YouTube. All the links are in the description of the YouTube video. If you're on our website, it's the advanced course. There's a video there for you to learn all about what's included. And as always, right, if you're not a member yet, or if you're not ready yet to be a member, make sure at the very least check out that free trial, because that free trial has a free pass to our trade room, a free trading course, hundreds of examples of how we apply this strategy. You'll love the free classes. You'll love the free pass. I really enjoyed making that stuff for you guys. So check out the free trial. Again, I'll put all the links either below the video on the blog or in the description of the YouTube video. And on that note, let's wrap this party up here tonight. You guys get some rest. Be careful in the overnight Asian session. I'll see you tomorrow morning at the opening bell. If not, come back and see us again tomorrow night on the next edition of our nightly newsletter. My name is Joseph. Thank you so much for being here. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.